I was sipping my morning smoothie when a headline nearly made me spit it out, figuratively, of course. Cardano, ADA, quietly got invited to join a major Wall Street crypto ETF, the kind managed by a $1.7 trillion asset giant. I couldn't believe it. Cardano, the so-called ghost chain, now rubbing shoulders with Bitcoin and Ethereum in an institutional fund. This felt like discovering a secret backdoor into the big leagues, and I knew I had to dig deeper. Something told me this could rewrite Cardano's future. But not in the way most people think. The news that changed my perspective. Just days ago, I stumbled on news that Rowe Price, a heavyweight in traditional finance, has an actively managed crypto ETF in the works. And guess what? Cardano's in it, alongside Bitcoin and Ethereum. Let that sink in. A Wall Street veteran basically said, "Yep, ADA deserves a seat at our table." For context, multi-asset crypto ETFs are essentially bundles of different cryptos in one package. Instead of betting on just Bitcoin or just Ether, this fund spreads its bets across a handful of assets, now including ADA, to balance risk and reward. It's like a crypto trail mix, a little BTC, a little ETH, a sprinkle of ADA, aimed at giving investors a smoother ride in a wild market. When I read that Cardano made the cut, it hit me personally. I remember the times not long ago when mentioning ADA in institutional circles would get you eye rolls or smirks. Cardano has often been the underdog, even declared dead by skeptics during its quiet periods. And yet here we are, a respected financial institution essentially validating Cardano by including it in a regulated investment product. This isn't just a symbolic pat on the back. It reflects a real shift in how big players view network-driven projects like Cardano. By adding ADA, Rowe Price is acknowledging Cardano as a legit investment choice, rather than some flyer on a fringe project. Think about it from an insider perspective. For institutional investors who've mostly stuck with Bitcoin and Ethereum, seeing ADA in the mix might spark curiosity. Why is Cardano in there? What do they know that I don't? It puts Cardano on the radar of money managers who might have ignored it before. It's like Cardano just graduated from the kids' table to dining with the grown-ups in the crypto world. When I first bought ADA years ago, it was mostly faith in the tech, the mission, and maybe a bit of Charles Hoskinson's charisma. But I also remember feeling a pang of doubt every time mainstream finance called Cardano vaporware or a science project. If you've been in ADA that long, you know what I mean. So this ETF news felt personal. It was validation. I had this moment of, they're finally seeing what we saw all along. It was like watching a scrappy indie band suddenly open for a superstar and I knew them before they were cool kind of moment. Naturally, my curiosity went into overdrive. I started digging, what does this ETF really mean for Cardano's future? Is this the break we've been waiting for, or just a footnote? I imagined some big shot wealth manager somewhere looking at ADA for the first time because it's now in their fund by default. Maybe that leads to a deeper dive into Cardano's ecosystem, maybe even some direct investment in ADA or Cardano projects. This could snowball slowly into more institutional adoption of Cardano, not a hype-driven frenzy, but a steady, confidence-building uptick. Let's break down why this is such a big deal. First off, credibility. Cardano getting into a regulated ETF boosts its credibility in a way few other events have. It's not a YouTuber's prediction or a Twitter rumor. It's a traditional firm putting real money on ADA because they see potential. That alone can draw fresh attention and funds towards Cardano from corners that previously wouldn't touch it. Secondly, accessibility. An ETF is a vehicle any stockbroker or retirement account can handle. By being part of that vehicle, ADA becomes easier to hold for a whole class of investors. Grandma might not know how to buy ADA on an exchange, but her investment advisor can buy shares of an ETF that quietly includes ADA in the mix. It broadens the playing field. And it's not just about Cardano. This signals a larger trend toward multi-asset crypto investing. Rather than picking winners, funds are saying, let's hold a basket of digital assets. It's a recognition that crypto isn't monolithic, it's an ecosystem. If this Rowe Price fund succeeds, it could pave the way for more like it. We might see multiple crypto ETFs, including ADA by default, each bringing more liquidity and visibility to Cardano. There is, of course, a regulatory maze to navigate. The US SEC still needs to approve products like this. Their decisions will set the tone. If they greenlight Rowe Price's crypto ETF or others from BlackRock, Fidelity, etc., that's a massive confidence boost. If they drag their feet or say no, things could stall. Over in Europe, regulations like MiCA are already providing a clearer framework, which could make it easier for European funds to do something similar. So we're at an inflection point. Regulatory clarity, or lack thereof, will play a big role in how far and fast this institutional adoption goes. Meanwhile, something interesting is brewing in fintech, especially in Asia. I've noticed startups in regions like Southeast Asia and Africa often look at multi-asset crypto solutions as a way to leapfrog traditional banking. If big funds treat ADA as legit, it indirectly helps those startups make their case. For example, a payment app in Asia might feel more confident using Cardano's blockchain or even ADA itself if institutions are on board. Multi-asset platforms could simplify cross-border payments and lower costs, and ADA being part of an ETF gives it a stamp of approval that these innovators can point to. It's a stretch, but I wouldn't be surprised if a year from now we hear about some fintech app using Cardano for settlements, citing the institutional acceptance as a green light. The bottom line: Cardano's inclusion in this ETF is about opening doors. It's not a guarantee of success, but it widens the pathway for money and innovation to flow into ADA's ecosystem. It's like the beginning of a new chapter, where Cardano is taken more seriously by the kinds of folks who control pensions and endowments. As someone who's been on this journey for a while, it's incredibly validating and exciting. At this point, I felt my inner investor getting a bit giddy. Institutional money, broader adoption, the potential for ADA's narrative to shift from maybe later to let's include it now. My mind raced to the obvious question: what could this do to ADA's price? Are we talking moonshot or a modest bump? I had to be realistic. But before we go any further, let me drop a vital disclaimer for you. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. All right, glad we got that out of the way. Now, here's my honest take. In my experience, ETFs are not rocket fuel that send prices to insane heights overnight. They're more like a steady IV drip of investment. So I'm not here to hype you with ADA to $100 headlines. Instead, let's consider a few realistic scenarios for the next couple of years. Around 2025 to 2026. Base case: ADA maybe lands somewhere around $1.50 to $3 by 2026. This assumes a normal crypto market cycle. No crazy blow off top, but growth as usual, and some moderate institutional allocation thanks to these ETFs. In this scenario, Cardano chugs along, keeps building, and benefits from steady inflows from funds rebalancing into ADA. Basically, ADA would trade less like a wild speculative alt, and a bit more like a mid-cap asset with some institutional backing. Honestly, this range isn't far-fetched. It lines up with Cardano's past behavior and typical cycle multipliers. Optimistic case: ADA could reach $3 to $6 by 2026. Here, we'd need things to go right. Maybe multiple multi-asset ETFs, beyond just Rowe Price, include ADA by default, both in the US and abroad. Perhaps we get regulatory clarity in the US and Europe that lowers the risk of holding ADA. No surprise crackdowns. We might also see a meaningful uptick in Cardano's on-chain activity, say, a big surge in users from an Asia-Pacific fintech platform, or a breakout Cardano D-app that gets real traction. In short, Cardano would start fulfilling some of its promise and enjoy the credibility boost. Hitting the upper end of this range would mean breaking the previous all-time high approximately $3.10 in 2021, which, while ambitious, could happen if enough dominoes fall correctly. Maximum plausible, perfect storm. If everything goes ridiculously well, I'm talking $7 to $10 plus at the peak of a euphoric 2025/2026 cycle. Now, a big caution. This is not what I expect to happen by default. This is the moonshot scenario. Picture a roaring crypto bull market similar to late 2021, but this time with multiple large ETFs launching and pouring money in. Imagine BlackRock, Fidelity, Vanguard all rolling out crypto funds that include ADA. Add a dash of massive adoption, maybe Cardano becomes the backbone of some huge real-world project in Africa, or the go-to platform for tokenizing assets, and DeFi on Cardano catches fire. And top it off with a favorable macro environment, low interest rates, global investment frenzy. If all that happens together, sure, ADA could blast towards that $7 to $10 range, or even wick above, but that's a lot of ifs. The stars rarely align so perfectly. It's the ceiling, if you will, not the floor, or even the base case. I'm not planning my life around this scenario, and neither should you. So, what's the most honest answer I can give about ADA's future with this ETF catalyst? Probably that a reasonable peak for ADA in the next cycle, factoring in the ETF and everything else, might be around $3 to $6. That's where I see the fundamentals, the potential ETF demand, and a standard crypto market cycle converging. It's optimistic, but not outrageous. Could it be higher? Yes. If Cardano really fires on all cylinders with both narrative and usage growth, then we start talking upper single digits. But if it underdelivers or the market underwhelms, we could also see it stay more muted. For me, seeing ADA in that $3 to $5 range in a couple years would be huge. It would mean Cardano actually delivered on becoming more than just hype. It became a valued part of the crypto ecosystem with real weight behind it. And frankly, as someone who bought ADA when it was pennies, even the low end of these scenarios represents a solid return. Remember, ETFs create steady inflows, not hype-driven pumps. The big money tends to scale in over months or quarters, not all at once. So I'm viewing this ETF thing as a long-term credibility and demand booster, not a lottery ticket. It potentially raises ADA's ceiling over the long haul, even if it doesn't guarantee any specific moonshot in price. All this talk about Cardano's future got me thinking about my own crypto strategy. News like this is exciting, but it's not a cue for reckless bets. It's a cue to double down on good habits and smart moves. Here's what I'm doing, and what I suggest any ADA holder consider. 1. Stay secure with a hardware wallet. First things first, not your keys, not your coins. If you're holding any significant crypto, ADA or otherwise, on an exchange, you're taking on risk. I learned from watching some big exchanges go under that you have to take security into your own hands. I personally use a Ledger hardware wallet to store my long-term crypto holdings offline. When you control your own keys, no exchange hack or freeze can take your assets. Just remember, always buy your hardware wallet directly from the manufacturer. There are fake devices out there on third-party sites, and you do not want to risk that. I have a direct affiliate link to Ledger on my website, which you can find in the description. It's an official link to their site if you use it. It supports the channel at no extra cost to you and ensures you're getting a genuine device. The peace of mind is worth it. 2. Make your ADA work for you. Stake it. Holding ADA waiting for the moon? Why not earn more ADA while you wait? I've got all my ADA staked, and in fact, I run my own Cardano stake pool called Cheek. Staking is a no-brainer for long-term ADA holders. It's like earning interest just for supporting the network. The best part is your ADA isn't locked up or stuck. You remain in full control and can move at any time. If you haven't staked your ADA yet, seriously consider it. You can stake through wallets like Yoroi, Daedalus, etc., and just choose a pool. And hey, if you want to support this channel's mission, you're welcome to stake with our pool Cheek. It really helps us continue making these videos and content. Many from our community already do, and I can't thank you enough. If you're currently staked with another provider but feel like supporting us, you can redelegate to Cheek at any time. It's super easy and helps a ton. The bottom line, don't leave free rewards on the table. Staking lets you compound your ADA holdings without lifting a finger, all while helping secure the network. 3. Diversify your exchange options. Plan A, B, C. One lesson I've learned over the years is that exchanges can be fickle. They go down for maintenance at the worst times, get overloaded in bull runs, or occasionally run into legal troubles. That's why I've made it a point to sign up KYC and test multiple exchanges. I treat it like having backup plans. Plan A, Plan B, Plan C. If my primary exchange has withdrawal issues, I immediately have a plan B to switch to. This strategy saved me a lot of stress. When one exchange halted withdrawals for a week, I simply moved to my backup and kept going. I highly recommend you do the same before you actually need it. Make accounts on a few reputable exchanges and get verified now, not later. On my website, I list all the exchanges I use regularly, like BitJet, Blowfin, and others. And yes, those are affiliate links that support the channel. If you use them, it's appreciated, and it won't cost you anything extra. But regardless of affiliate stuff, get yourself set up with at least a couple of options. It's just good risk management. 4. Keep learning and stay connected. The crypto world moves fast. What's true today might change next month with a new update, regulation, or innovation. That's why I put a big emphasis on education and community. We have a free educational Discord server, link in the description, where a bunch of us hang out, share news, answer questions, and help each other out. It's honestly one of the best ways to not feel alone in the crypto journey. If you're not in there yet, hop in and say hi. There's always someone who can help if you're confused about something or just want to chat about the markets. For those who want to go even deeper, I also run a crypto school at cheekyschool.com. I've created courses on trading, portfolio management, risk management, basically all the stuff I wish I knew when I started. The goal is to shortcut your learning curve and help you avoid common mistakes. And since you've watched this far, I'll mention there's a discount code in the description for 50% off any course. Education is an investment in yourself, and unlike crypto, it never loses value. So definitely check that out if you're interested in leveling up your skills. 5. Explore new opportunities. Do your research. I'm always on the lookout for innovative projects, especially ones that can provide passive income or solve real problems. Longtime viewers know I've been talking about Unity nodes for a while. It's a project launched by World Mobile and the Minutes Network that aims to create decentralized mobile networks. I finally jumped in and purchased a Unity node license. It's basically a software license that grants me access to operate part of their network. Don't think of it as a flashy NFT. It's more utility-based. This one license actually lets me connect up to 200 devices. I'm starting with a small test, just 10 phones to begin with, to see how it all works in practice. The cool thing is, as that network operates, I can choose to be paid out in multiple cryptos. I'm opting to receive rewards in BTC, ETH, ADA, and XRP. If this pilot goes well, I might scale it up gradually. It's potentially a great way to earn crypto passively by providing a real service. In this case, mobile coverage and network minutes. Now, Unity is not the focus of today's video, and it's certainly not for everyone. But I wanted to share what I'm up to because it shows how I'm thinking. Beyond just holding coins, I'm looking at crypto-related infrastructure that could generate income. As always, do your own research if you're curious. I'll leave a link in the description to Unity's light paper and their rewards calculator so you can check it out. And if you've been following the channel, you know this concept isn't brand new here, but I'm excited to finally get my hands dirty with it and we'll keep you posted on how it goes. Stepping back, this really feels like the start of a new chapter for Cardano. The inclusion in an ETF, the steady march toward institutional acceptance, and the continued growth of its ecosystem, all of it, is painting a picture where ADA's story is no longer just about speculative hype. It's becoming about fundamentals and real adoption. Cardano is moving from being an outsider to, slowly but surely, becoming an insider in the finance world. As an ADA holder and someone who's been through the roller coaster of the last few years, I'm more optimistic now than I've been in a long time. Not because I expect a sudden moonshot, but because I see the foundation being laid for sustainable growth. Cardano in an ETF means it'll quietly find its way into portfolios without fanfare. And that's fine by me. I'd take slow and steady gains driven by real usage and recognition over wild pumps and dumps any day. It's almost poetic. For years, critics said, Cardano has no use, no adoption, it's just academic. Now we have major institutions saying, we want a piece of Cardano in our investment products, and fintech startups potentially leveraging Cardano for real-world solutions. The narrative is flipping. ADA might finally shed that underdog image and be seen as a solid long-term player. So where does that leave us? If you're like me, perhaps it leaves you with a sense of cautious excitement. I'm continuing to hodl and stake my ADA, secure it properly, and diversify my strategies as I've outlined. I'm not making any reckless moves. I'm just steadily building my position and knowledge. Whether ADA hits $3, $5, or $10 in the next cycle, I know I'm positioned to benefit while managing the risks as best I can. One thing is for sure, I'll be keeping a close eye on that Rowe Price ETF and any others that come along. Each quarterly report or rebalance that shows ADA holdings going up will be a little victory for our community. It's validation that Cardano is here to stay and grow. And with that, I want to thank you for joining me on this little deep dive into what could be a pivotal development for Cardano. It's not often we get to witness the tides turning in real time, and I'm thrilled to have you all here to experience it with me. Remember, this isn't just about numbers on a chart. It's about a technology and a vision we believe in getting its due recognition.